Alright guys, how's it going? Let's talk about the 3 downsides to dividend investing. Now, I just want to get this out of the way right away. I love dividends, but there are some downsides to dividend stocks if you do your dividend investing wrong. The first downside of dividend investing is buying a stock simply because it pays a high dividend. This is a common mistake, especially people that are new to dividend investing make. In my opinion, you should invest in dividend stocks that are solid companies that pay a dividend, not companies that simply pay a high dividend. That's important to understand, because if you're buying companies that are not quality companies, the dividend isn't going to last, and potentially you're going to lose money as the stock price goes down just to collect a large dividend. The second downside of dividend stocks is paying any price to buy a share of a dividend stock. Some people say, you know what, I don't care, I am just going to buy the stock because it pays a dividend. And this even applies to good companies. If you overpay for a company, essentially you're paying with your time, in the sense that it's going to take that many years for the stock to appreciate to realize the returns. It's an opportunity cost. The third potential downside of dividends is getting into the dividend trap. Now you might be asking, what is the dividend trap? Let's use myself as an example. I like dividend stocks. I invest heavily in dividend stocks. But there are opportunities in the market where your better asset allocation will be a stock that does not pay a dividend. And that's what I'm always balancing. If there's a time where I think I can make a higher overall return investing in a stock that doesn't pay a dividend, then I'd be foolish to simply invest in a dividend stock simply because I like dividends. Let's use an example. O'Reilly Auto Parts, sometime, I think it was about a year ago now, there were no issues with their business, but there was a lot of downside negativity on retail stocks. O'Reilly Automotive got caught up on this. They're a really strong company. If you look at their balance sheet, you look at their financials, they're a very strong company, minimal debt, very well respected brand. So instead, they don't pay a dividend. So instead of purchasing, say, Johnson & Johnson, who is a solid dividend payer that pays a dividend, I invest in O'Reilly Auto Parts. Johnson & Johnson's appreciation it's been fairly stagnant over the last year, where O'Reilly Auto Parts, I think I'm at a 35 to 40% return. So you got to weigh the opportunity costs here. And like I said, dividend investing, I am a fan of dividend investing. Don't get me wrong. It is a great long-term strategy, but don't make those 3 common dividend investing mistakes. Alright, if you like this video, don't forget to like the video, subscribe if you're not already a subscriber.